Good morning, folks. It's another exciting day on planet Earth. So, new development in the Chinese real estate developers. This is now Country Garden is the name of the developer. They are believed to be the largest property developer in China, and up until just recently had managed to maintain their investment grade ratings, but their bonds have now taken a big hit. All of the property developers are having a challenge finding new funds, and of course they live on cash flow, whether it's coming from investors from the sale of investment condos or from lenders paying, property developer who pays for it until it sells. The bank does. So that's new development in real estate developers. If we skim this is Shimao, which is another one of the real estate developers, and Collapse. So we're looking at specifically those two terms. And you can see property sector crashing, Country Garden, bonds plunge, etc. Now, China made a move Sunday night or Monday. So the Chinese government is starting to ease financially, which is interesting, while the rest of the world is claiming that they're about to taper and raise interest rates and et cetera. China's moving in the other direction. Well, I believe the reason China's moving in the other direction is because their real estate market is in a state of, call it free fall, call it collapse, call it what you will. It's headed towards its real value, which is significantly lower than where it is today. Now, how that spills out into the rest of the world remains to be seen, obviously, folks. This Country Garden, evidently, they have more exposure to U.S. lenders than the other real estate developers do, and there is over $1 billion in bonds, Country Garden bonds, coming due in 2022. And so we may see that it isn't Evergrande that causes knock-on effects in the U.S. and elsewhere. It is Country Garden or one of the other developers. So anyway, let's take a quick spin through the charts this morning. So gold, big move, two days of impulsive price movement. Reasonable to expect price to take a rest after that kind of action. And you can think of it as a rest, or it's digesting this big move, however you want to look at it. This is fine action after a big price move like that. And in particular, notice that gold is consolidating above all three of its moving averages in bullish alignment. MACD in bull mode on a buy signal, energy very elevated. I mean, what else do you want, folks? Gold's looking good. The silver's got catching up to do, and looks like this morning, silver decided that it's going to do some of that catching up today. So nice big move here in silver this morning. And notice what's interesting to me about this chart, one of the things, notice this little pullback. Same thing here, same idea we just talked about in gold. Big price movement, now we need a rest. Well, coincidentally, I guess if you didn't believe in technical analysis, you probably wouldn't be watching my videos. But anyway, so we can see from a technical analysis perspective that price has squeezed itself into this corner. You can say, those are just arbitrary lines drawn on a chart. And I can say, okay, believe what you want to believe. And so anyway, price got squoze into that corner, if I can say squoze on video. And now we're getting this big price movement out of that consolidation there. Tim Morge would talk about energy coils. And so when you'd see price get squished into an area, whatever the area was, he talked about price energy coiling, getting ready for its next move. And so we hard or, not easy to predict in which direction the next move will come. But when we see price coiling, we can expect the next move to be impulsive. And of course, that's exactly what we're seeing there. That's an impulsive move in silver. Very nice to see gold flat. So Silver moving today, gold not moving. It's interesting. And folks, if you follow the supply chain dynamics for silver, I strongly believe that there isn't the physical silver out there readily available anywhere close to these prices. Lots of silver out there. I won't sell you mine at these prices. So, talk to somebody else. Maybe you can scrape some off of them at those prices. But just encourage you, if you don't have the amount of physical silver in your portfolio that you intend to hold ultimately, you might think about speeding up your acquisition program. So the mining stocks, with everything that's going on right now in the markets, it's not really surprising to me that we don't have people piling into the mining stocks. I think, a lot of investors are in defensive mode at this point. Oh no, is it time to panic, or maybe already in panic mode? Crypto, based on my proxy for crypto, 9,000 different crypto toys out there these days. Certainly the argument that the scarcity exists in the crypto world, well, how can you make that argument? There's 9,000 of the darn things. And so anyway, I track Bitcoin because it's one of the financial markets. I don't recommend it as an investment, but personal opinion there, folks. So the chart, price has been bumping along resistance at the median line of this pitchfork and just hasn't had the energy to push up into additional resistance above that level, which would be the 20-day moving average. And so, Bitcoin remains weak. We can see that it appears to be rolling over last night and today. Based on volume studies, it wouldn't surprise me to see a push lower on high volume. And I noticed this morning we have this open gap. So got an open gap here in the chart. Price action does not like gaps. And so the tendency, and of course it's not price, it's human beings, because everybody and their dog can look at this chart and say, oh, that's an open gap, let's go close it. And then they make trading decisions, investment decisions based on what they expect to see. So to some extent, it's self-fulfilling prophecy. Technical analysis, open gap gets filled. So anyway, wouldn't surprise me to see a spike down, fill that gap, huge spike in volume. I don't buy, whether you buy the falling knife or not, that would be your decision to make. This is the US dollar in the weekly time frame. Dollar's a little bit strong this morning. And we can see that here this is weekly time frame. So this is a whole week candle, and this is Tuesday of the week. So not a lot of action that candle is based on. Coming down here to the lower median line of this Andrews pitchfork, where we could expect support. We can see it provided support back here. Energy elevated. MACD very overbought, but it looks like, we're still on a sell signal. So very overbought, still on a sell signal. In the daily time frame for the dollar, so we can see we lost this support level, impulsive drop lower, and now we're getting a rally. Is that a counter trend movement? So basically it's just a bounce back, test this level from below before rolling over and heading lower. And we'll see in the next, today or tomorrow, we'll see if that's the case. Interest rates, obviously, folks, interest rates, in my opinion, in an unmanipulated market would be heading higher, significantly higher. There is a lot of energy behind this move in the interest rates. We're looking here in the weekly time frame, big impulsive bar, a doji candle. Dojis are always indicative of elevated energy. So the fact that we got a doji out of last week's action is significant. Now that could have been a top. That could have been significant energy during the week, and it was over. The battle was fought, and the buyers, sellers, however you want to look at that when you're talking about interest rates and the bonds, they won and pushed price over or the yield over and it went lower. Well, that's not what happened. The battle was fought and interest rates are heading higher. So, and I would suggest, and just something to ponder, folks, put it on, just something to think about. I call them the bond vigilantes. Really, again, it's human psychology. At some point, intelligent investors who are paying attention will notice things going on in the world that make them nervous. The Kazakhstan people basically throwing the government and security forces out of their country. So, of course, that's not what you're hearing on mainstream media, but that appears to be what's going on. A collapse of Chinese real estate developers. I mean, there's just any number of things that you could point at in the world right now that could make a savvy investor nervous and make them start to think about doing different stuff with their money, like charging more interest for putting their hard-earned money at risk. And so that could be what we're seeing, just a general repricing of risk. And here we are in the daily time frame for the yield on the 10-year note. And so we can see this was Friday, impulsive movement, bounce off the 20-day moving average, and this horizontal, what is now a support resistance zone, because we got, there it is, resistance, 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 breakthrough, and a gap higher. And now we've had the pullback where we have tested the breakout level, and now the move higher has resumed, and resumed with force. That's an impulsive price movement, price bar yield, and now it's got follow through with a gap. And so very, very high energy to get that gap. Notice that it gapped over the median line. That's, as Andrew's pitchfork aficionados, that's where we would expect resistance to lie. And it appears the fact that the yield gapped over that level would support that idea. Now, MACD is very overbought. So, very overbought market, but on a buy signal and heading higher, and energy very elevated. So again, there is a lot of energy pushing interest rates higher. This is SPX in the daily time frame. Pull back from the median line of this modified shift pitchfork, potentially finding support at that level. We could also talk about potential double bottom from that prior low. And we may see what happens there today. Let's see, MACD on a sell signal and could be heading back into bear mode if it makes it that far. Energy low. In the Dow, so as we saw in the SPX, price has lost both the 20 and the 50-day moving averages. Appears to be moving lower today. Doesn't appear to be holding what could be support along the median line of this mod shift pitchfork. MACD on a sell signal, energy low. So equity's not happy. NASDAQ, tech stocks, always more sensitive to interest rate movements. And so weak this morning. Is that really 2%? 1.9, so down 1.9% already this morning. Energy low, and so MACD is in bear mode. Both indicator lines below the center or zero level of the MACD indicator. Bear mode suggesting the primary trend is downwards at this point. As I pointed out on Friday, we have potentially a series of lower lows or lower highs and lower lows, definition of a downtrend. So potentially that was our last lower high, and could be headed for a new lower low. Folks, I don't have anything else for you this morning. Have a fantastic day, and I will talk to you soon.